good morning. Welcome to the Trading Edge Stock Market Podcast Market Performance. So, the Nifty 50, it closed down about 208 points, ending up at 19,542. As for the BSE Sensex, it wasn't in great shape either, dropping by 885 points to land at 65,397. When we look at the broader indices, the BSE Small Cap Index didn't see much change, but the BSE Mid Cap and Large Cap indices both took a 1% hit. Weekly Market Overview. Taking a look at the past week, things weren't too rosy for the markets. The Nifty closed down by 1.06%, and it had to grapple with various global factors. Tensions in the Middle East, a spike in crude oil prices, and rising bond yields in the U.S. all played a part. Technical analysis. Here's what's going on from a technical standpoint. The Nifty 50 showed a doji candlestick pattern on its daily charts. This means that the closing price was pretty much where it opened, indicating that bulls and bears were uncertain about the market's next move. On the weekly charts, things looked a bit bearish with an upper shadow, but the index maintained its pattern of forming higher highs and higher lows. Don't forget the previous week's low at 19,480, which is pretty crucial. If we see the index decisively breaking that support, well, we might be looking at 19,300 as the next stop, but if it holds on to that support, it could head back up to the 19,700, 19,850 range, or so the experts say. They also think we'll see the markets remaining a bit sideways and volatile in the coming week, somewhere within the wide range of 19,300 to 19,0850. Futures and Options Insights. Now, in the futures and options arena, the options data indicates that 19,500 is a significant level on the downside, while the higher hurdle is in the 19,600, 19,800 range. In the monthly options space, the maximum call open interest was at the 20,000 strike, followed by 19,800 and 19,600 strikes. There was some notable call writing at the 19,600 strike, as well as at the 19,700 and 19,500 strikes. On the put side, the maximum open interest was at the 19,000 strike, followed by 19,500 and 19,400 strikes. There was some put writing happening at the 19,400 strike and also at the 18,700 strike. The markets seemed to be range-bound, with strong call writing observed at the 19,600 strike and a decent amount of put writing seen at the 19,500 strike. Global economic challenges. Now, zooming out a bit to the global economic landscape, there are some challenges on the horizon. We've got rising interest rates, inflation, and disruptions in the supply chain causing some ripples. All this is leading to a bit of a risk-off vibe among investors. Foreign institutional investors, FIIs, are pulling back their funds from emerging markets like India. Impact of a strong U.S. dollar. The U.S. dollar is flexing its muscles against most other currencies these days. This makes Indian stocks look a tad pricier for FIIs, who usually do their investing in rupees. Resilience in the Indian stock market. But here's the twist. Even with FIIs selling off, the Indian stock market isn't folding. Nope. Domestic institutional investors, DIIs, are stepping up to the plate, buying up stocks with gusto. They've got a little help from strong retail participation and inflows from mutual funds and insurance companies. Global market trends. Taking a glance at the global markets, Nifty had a tough time, dropping for the third session in a row on October 20th. Global equities weren't in a good mood, and oil and gold prices climbed. This was all in response to the possibility of some trouble brewing in the Middle East, with the conflict between Israel and Hamas possibly spilling over into the wider region. Economic data. Looking ahead, this week might be a bit rocky. We've got the scheduled FNAMP-O series expiry on October 26th, and traders are trying to find their balance for the next series. On the economic front, all eyes are on the data about foreign exchange reserves set to be released on October 27th. As of October 6th, India's foreign exchange reserves had dipped to $584,740 billion open interest. The highest open interest on the put side is at the 19,500 and 19,400 strikes, with 19,300 hanging in there as support. These levels are like the safety nets for the market. On the call side, the game is at 19,600, 19,700, and 19,800 strikes. These levels are where the market might face some resistance. It's like they're putting up roadblocks. Put, call, ratio, PCR. The put-call ratio, PCR, is at 0.77. It's like a seesaw, and right now, the puts are slightly on the lighter side. Overall, open interest. We've got a total of 17,42,242 puts and 22,68,292 calls in the mix. That's a lot of contracts floating around. Intraday changes. During the trading day, there were some shifts. Puts saw an increase of 2,23,193 contracts, while calls had a change of 5,46,648 contracts. So things were quite dynamic. Put-call open interest change. The net change in open interest between puts and calls was 3,223,555. It seems like more contracts shifted from calls to puts, creating a bit of a shift in sentiment. Implied volatility, IV, averages. When it comes to the implied volatility, calls are at an average of 6.65, while puts are sitting at 11.77. So there's more perceived volatility on the put side. Now, regarding FII and DII activity, On October 22, 2023, it wasn't the best day for the Indian stock market. Foreign institutional investors, FIIs, and domestic institutional investors, DIIs, were on the selling side, making a net negative move of R1645 on D crore in Indian stocks. Thanks for tuning in. Hope you have a fantastic trading day, and may the market winds be ever in your favor. Have a good trading day.